Okay, good day to everyone. In today's episode of Growing a Tree of Prosperity, we want to look at potential small cap or mid cap winners in the SGX. This is something which I think a lot of brokerage houses they are currently talking about in the financial markets. So let's dive right into this topic. Okay, now to understand a little bit of background as to what's happening in the financial markets, on February 2025, MAS announced the Equity Market Development Program, or the EQDP. This program is worth about $5 billion, and it invests in the strategies of local asset managers. The money is also used to boost a little bit of investment research. And one of the objectives of the EQDP is that they want to see money going into stocks other than the large cap stocks. All right, other than the large cap stocks. On July, $1.1 billion was allocated to 3 fund managers. Okay, so that's sort of like the background that is surrounding the Singapore markets today and sort of explains why valuations have been going up. Okay, so some of the consequences is that investors are now looking at stocks that are not the 30 stocks listed in the STI, right? Which means that anything within the 50 stocks beyond the 30 largest market cap, that's something that a lot of research houses are currently looking at. Anything below that top 80, it's still considered small cap or micro cap, so it might not be able to gather as much support or enthusiasm. All right. So in this session, I'm going to talk a little bit about what is a mid-cap stock. And one way of looking at a mid-cap stock is position 51 to position 80 in terms of size in the local markets. All right. The smallest, I went in to visually inspect the sizes. I got artificial intelligence to rank our local stocks based on market cap. The smallest being Far East Hospitality Trust, which is still very large, $1.1 billion in market cap. And the largest being Olam at the other end, which is about 3.85 billion. So anything between 1 billion and 4 billion can be considered something like a mid cap. All right, which means that anything below 1 billion in size may qualify as a small cap counter in Singapore. All right. Just remember that there is no firm definition of what a small cap, mid cap, and a large cap is in Singapore. And obviously, you can't apply the same standard that they do in the US, right? Because in the US, the Standards and Poor 500, that's 500 large caps straight away. Okay. So this is how I would see it personally. Okay. So let's dive into an example of one of the iFast, which is a brokerage. On the 25th of August, they basically gave a first cut suggestion on how to play this EQDP stimulus plan. Okay, so iFast is not the only broker that's doing this. I'm just using this as a form of an example so that you guys can understand the thought processes that go behind reading, for example, a brokerage research their work, right? So sometimes the problem is that they tell you the answer, but I want to try to add a little bit of flavor to what they're trying to do. Okay, so iFast has 8 picks: Comfort Delgro, Hobie Land, Penn United, Raffles Medical, Sheng Siong, SIA Engineering, UMS, and UOB here. All right, so these are the 8 stocks that they think, you know, it's going to be the EQDP winner over the next 3 to 6 months. Okay, it might turn out to be true or it might turn out to be false, but generally you can't hold these research houses against them. Nobody really gets penalized if they are wrong. Okay, now, so what I would normally do when I get a list of stocks like this is that I then turn to my Python programs. I've got a Jupyter notebook where I could just put in the stock tickers and it will produce a table like this. Okay, so I did a little bit of data entry. Of course, I added the STI ETF as some sort of like a benchmark. Okay, then I'm able to list out the forward PE of all these counters, and I wouldn't say that they are cheap. Okay, they're some of them are in their 20s. All right. And I also look at the price to book value, and that's not cheap either, right? Only Hobby Land has a price to book value below 1. Yeah. But because I have a dividends kind of focus to my investment, and I'm probably followed by many dividends investors, right? Immediately, what jumps up ahead is that Comfort Delgro and UOB Kay Hian are dividend stocks because they produce more than 5% dividends, all right? So this is some of the useful statistics, and I guess the iFast research brokerage, they might not have that kind of dividends kind of emphasis, so they might not be able to build a table and show it to you. At least the table that I've discovered didn't have dividend yields. All right, so you could use this as reference. Okay, so straight away we learned that, hey, UOB Kay Hian, Comfort Delgro, these are dividend stocks, might be useful for the portfolio. All right. Then the next question is, how thorough has the research house have been doing their work? If they've done a very good job, then these counters would be in different sectors, right? And if they're in different sectors, they are independent of each other, the market movements, then we will expect a very low correlation between each other. So when I build a heat map like this, we would see numbers that are well below 0.5. And credit to this wonderful research team, they've done a good job. We find that the correlation between these stocks is very low. Now, what else does it mean? It means that actually, if you buy all 8 of them in equal shares, you will have a decently diversified kind of counter, even though if you learn in standard finance that you need about 20 to 25 stocks to have a decent portfolio that is diversified. We could tell that they seem to not be very much correlated with each other, so it's a decent portfolio to have. Right, so that's the next thing that we learn when we look at this list. Okay, and then what I would do next is I would normally look at the 5-year returns. Okay, and you find that the 5-year returns for, if you were to put your money and split it between these 8 stocks, it would have given you 13% with a standard deviation of 13, a Sharpe ratio of almost 1, right? I mean, considering, assuming that the risk-free rate is 0, and you find that this is actually a fairly nice portfolio, okay? If you look at the STI ETF, returns are lower, the risks are higher, right? Low returns, high risk. So actually, this is a fairly good combination to own, all right? And this combination actually has a lower drawdown, all right? And if you plot it in a chart, you will see that actually recently the portfolio has in fact done very well. Okay, done very well from 2025 onwards. So the brokerage house is not really wrong. We are seeing this theme being played, and these stocks, you notice, right, they've been accelerating a lot faster than the STI ETF. All right, so you can actually visualize all these things happening while the brokerage house is making their recommendations. I suspect there's real money going into these counters. Okay, so with that, I think that there are 2 ways to play this list of stocks. If you are like me, you're focused on high-yielding dividends counters, then simply adding Comfort Delgro and UOB Kay Hian into your existing portfolio is not a bad idea. And in my shallow dives this week, I will be looking at UOB Kay Hian, right, to provide a little bit more information on this particular counter. So it should be fun, right? At least we know that this video and the next video, there is a sort of relationship with each other, right? Alternatively, you can buy all 8 stocks in equal shares. And we know that for the past 5 years, it's got higher returns and a lower risk compared to the STI. All right, I've shown you the evidence. Okay, decent Sharpe ratio, superior risk-adjusted returns. All right, just remember that there is a negative skew. So when you buy this combination of stocks, right, when the story changes, the meltdown can be fairly bad, all right? Yeah, but I don't see the EQDP, $5 billion is actually a very small sum. I don't see the government ever backtracking when it comes to this particular initiative, okay? All right, so if you like my content, subscribe to my channel. You can also buy me a coffee here. If you want to listen to my life story and figure out how the financial independence and retire early movement works, then by all means, sign up. Google ERM intro, take the first link, and I'll catch you in my next preview. And that's all I have for today. Thank you very much.